lady who needs no introduction whatsoever. Chavez, it's so good to have you here. And thank you for being here. So, a lady who does not need any introduction, but I'm going to take a pun and her name because we are lucky to have Lucky. Okay? And so, Lucky, please, thank you so much. If you would go ahead and address the community, I'd love it.
Thank you, Grace. Chavez, hello and welcome. Chavez, I wanted to take a few minutes today and talk to you because today, this May, marks 4 years since we came together as a community. So
Right.
it's been 4 years since we've been together, all of us. When we first met you as a developer, and you had loads of time in your hands back then, and you spent so much time with us, getting to know us, and you spent hours and hours sharing what your vision for the future is, what your values are, and you educated us on a different ways. You told us what books to read. And so you were like different teacher back then. As a developer, you taught us different things. And then as you built so many connection with so many of us, and when things went wrong, because, I think Peter asked you the other day,
Hmm.
what's your why?
Hmm.
And even though I already knew the answer, hearing it again was such a heartwarming moment for me. It reminded me of the person we all first connected with and why so many of us have stayed on this journey with you because of your heart, who you are, what you stand for. And I just wanted to take a moment today, to take us back because it's 4 years and wow, what 4 years it's been. And I want to thank you. You took on a broken community. And it's never easy to take on a broken community. We broken communities come with so many baggages, so many expectations. And, it wasn't your problem to have, but you did have that problem because of, as you said, you saw the faces you built a relationship with, and you couldn't see us in that moment going through what we were going through in that Zoom on that day. And you stepped up and you took us. Um, I'm getting emotional now. Sorry, everyone. But honestly, what a journey it's been, and you haven't given up on us. You have kept going, and you've worked so hard to make this success because you have a vision where you want to go, where you want to be in next 10 years, and you're trying to take us all with you. And I think I speak personally for myself. I have grown so much because you have helped me you saw something in me which I didn't see. You pushed me and made me believe in me. And really, I just want to, say all the everything you brought us together. And here we are today having a project which is freaking amazing. It's you have just done me so proud, and I am really, really proud of you. And I just want to say to this community, success is not built by one person alone. And Chavez can't do everything himself. He's doing his part. What's our part? What are we doing to help make this community and our company success? Because Chavez is doing everything in his power to give us everything, what we need. So it's in our hands now to make our company success and take us to the next level. So happy fourth anniversary, everyone. And we come and yeah, back over to you, Chavez. I just want to take a moment and remember
Well
everything.
Thank,
said, Lucky. Well said.
Thank you.
thank you so much, everyone, especially Lucky. Really, really overwhelming, you know. Uh, It is. It has been really, really very emotional days. Last couple of weeks. Looking at a product being successful and slowly and gradually getting to see everybody happy again is something that every parent loves when they see their kids happy. So it's just like, looking at the products being thrived and products working really well. So I feel like I'm a really good parent now. And day by day, it's increasing the feeling, that love, that emotion that we have attachment with the product is increasing day by day, and it's becoming beautiful. It's about to, I believe it's about to run. It was walking, crawling, now it's about to run. So, and today is a special session, by the way. We received few questions from the community. Uh, and Though I clarified a lot via Lucky, we had this conversation of questions that were shared to me regarding the custody of funds, regarding the security architecture of Rift auto trading engine. So today I'm here with the whole architecture, documented for you guys to have understanding and visibility as to what we are doing in the background, how it works, how the funds move, and how they come to you in your wallet. So the entire A to Z of the custody of the funds, how funds are moving inside auto trading engine, plus the scope of audit, where the audit is required in the smart contract, I'm going to highlight. And we have already submitted the contract plus the source code for audit already. So probably we'll have the audit as also done in next couple of weeks. And before we do that, let's start with episode 6 of Rift Before You Quit. Since we are running this series, and I'll not leave any episode or skip it. So let's do episode 6 first. Today, okay, shall we start now? Okay. Okay. And feel free to invite more people today, because today we are going to discuss the whole architecture after this episode 6. So that is very important, and I believe that will give bigger and broader visibility of auto trading engine to people. In this episode, we are going to understand why most traders never reach scale. Today, we are going to look into the difference between trading for income and building a capital system. Most traders think the goal is to win trades. Professional systems think differently. The goal is to scale capital without collapsing the structure behind it. The preservation of the capital, if you all remember. So, welcome back to episode 6. In episode 1, we exposed why most traders fail structurally. In episode 2, we broke down capital allocation and risk architecture. In episode 3, we explored how Rift Auto Engine structures execution. In episode 4, we analyzed Alpha Flow, Smart Flow, Micro Flow. In episode 5, we went deep into execution architecture and market scanning systems. But today, we are discussing the biggest gap between retail traders and professional systems, scale. Because making money once is not difficult. Making 100% gain on $10 is a portfolio of just $20. But making 100% gains on $1 million portfolio is $2 million. That is something which is close to impossible. Scaling consistently without destroying your capital structure, that's where almost everyone fails. Even very precise systems also fail to scale with a consistent profit. The illusion of small account success. Let's start with a dangerous misconception is in trading. If a trader makes 20, 40, even 100% on a same example, if you make $1 on a $1 trade, that's $2. But if you make $10 on a $100 trade, that is 10%. And it's really difficult to multiply or duplicate with a large amount of ticket, with a large amount of capital, the same kind of results. They matter. They are affected by scale. They are basically directly dependent on the scale. So one small account on a small account and suddenly believes they have solved trading. When a retail trader, they make, let's say, 10, 20, 50, 60, 70, 100%, even you and me, when we make that kind of money, big profit in one trade, we feel like we have mastered trading. But the market changes completely when scale increases. So this is a misconception. Let's take an example. Traders during 2021 bull market. I also made a lot of money in 2021. Raise your hands if you guys made a lot of money in 2021 bull run. People with $500 turned into 10,000. People with 2,000 made 50K, 100K, like that. Because there was huge volatility expansion at that time. The tokens got pumped so crazy that everybody was talking about crypto. I can see smiles on faces when we talk about 2021 bull run. It was a golden era for crypto. That's where crypto came into the limelight. That's when people learned what is crypto, because they were lured by the excess that people made. But afterward, what happened? Most people lost everything. Why? Because the system never scaled, only the luck scaled. So small account aggregation looks very impressive until real capital enters equation. Then crypto market cap in 2021, if we go to the Gemini right now, can someone do a search on AI for me? What was the market cap of crypto in 2021?
I'm doing it.
So it says start of 2021, it was between 770 to 800 billion, sorry.
Mhm.
And then it was around 3 trillion by November that year.
Right, because that was a very small market in which the whole multiplication was done, and then it all became like a slow snail show. And right now it is sitting at 2 trillion, which is almost, three developing countries worth of, you know, GDP. Back then it was simple because the multiplication, there was a room for multiplication. So that's, if we compare that with the trading, then it is very simple to, uh, you know, draw the conclusion or draw the understanding that small account aggregation looks very impressive until real capital enters the equation. And when crypto market experienced the real inflow from centralized finance, it all became like a, you know, slow uh, serial where movement was not so volatile. And if we understand with the small account versus scalable system, in the retail small account, there is over leverage, and that leads to spike. And whenever uh, retail user or retail traders, they experience spike, they get overconfident, and the same behavioral cycle in which more emotional sizing is there, and then inconsistent execution, which lead to fragile, volatile, and unsustainable uh, portfolio with short-term spikes but long-term collapse. Whereas if we compare it to the structured capital system, which has structured allocation, controlled exposure, and system driven scaling. The portfolio is disciplined, resilient, scalable, which has compounding stability and institutional edge. And that's what we are doing at Rift. Why most traders cannot handle scale? Scaling changes everything. Psychology changes, risk sensitivity changes. The moment you guys saw that TVL in Rift is growing from half a million to 1 million to 1.5 to 2 million, you guys had questions about scalability, about how these funds are going to be. Is there enough liquidity on hyperliquid? Are we able to manage this liquidity as an organization or not? So these sort of questions they come to the mind, and these questions are very natural. So scaling it changes everything. The whole psychology, the sentiment, risk sensitivity changes, execution discipline changes, emotional pressure changes. A trader risking $20 emotionally behaves differently than a trader risking $20,000. Very simple. Let's take a real market stat. According to CME and behavioral market study, finance studies, account size increases discretionary. If as account size increases, the discretionary execution and consistency decreases. The moment you start making more money as your portfolio grows, your ability to take risk, your fear of drawdown, it kind of changes, and your psychology towards taking position also changes. You think like you are a big shot. So emotional hesitation increases, drawdown recovery slows significantly. This is why professional systems remove human inconsistency from execution. And that's why most of the HFTs, most of the hedge funds, trading houses, they do not have human dependency on execution, because humans scale emotionally and systems scale structurally. Retail thinks in profit, professional think in survival. Capital preservation, the same concept which we highlighted on day 2 of our Rift Before You Quit series. One of the biggest mindset differences in finance is retail traders ask how much I can make. Professional systems ask how long can I survive? The consistency. How long can we keep on doing this? And that's how hedge funds they last. They have the lock-in period of 5 years, 10 years, 15 years. They hedge over the market price. Um, if you look at big hedge funds, they still have average Bitcoin price of 15-20K, I believe. If you joke, Lucky, can you go do it Gemini again? The lowest uh, Bitcoin, let me do it. Lowest cost of buying Bitcoin is with which hedge fund?
Pantera Capital.
Pantera, how much?
Uh, says, you know,
$65 per Bitcoin in 2013.
$65.
Yeah, they bought it at 65 per Bitcoin.
No, no. Right now, what is their average
Oh,
cost of
right
trading right now?
now. Sorry.
You're talking who's holding the most Bitcoin right now?
No, 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 that's um I want to know the average cost of buying with Pantera.
Ah, with Pantera.
Even if they buy right now, if they bought it for $65, that averages their cost of buying.
Hmm. It says it's not publicly.
No,
Okay. It's between
it's
15
it's
to 25,000.
it says between 1 to 10,000 for Pantera
In
and
drop
Galaxy.
in drop stat, we can find the average. I'm checking. Let you know.
Okay, okay. So this is how these large hedge funds, these funds, institutional funds have consistently made money because of the consistency they followed without fearing of the scale. And none of their investors have even tried to, jeopardize their consistency in buying or hedging the Bitcoin or Ethereum against the inflation that they are doing. So this is the biggest mindset differences in finance between retail traders and professional systems. So real hedge fund example, we already took Pantera's example. Um, Large funds, they heavily focus on exposure management, downside protection, volatility balancing, correlation control. Now, if you go to Pantera and talk about investing $50 million dollars in Bitcoins, you can potentially buy Bitcoins at 20, $30,000 each. So, and that is the offering on institutional buying that they can potentially give because they have that fund created with consistency over years and years. So they focus heavily on exposure management, downside protection, volatility balancing, correlation. They have been, I mean, the whole point of explaining this is they have been continuously buying Bitcoin no matter bull market, no matter bear market. They might have bought Bitcoin at $120,000 as well, $115,000 as well, $90,000 as well. They bought back then at $65 as well. So it is the consistency that has paid off, that has given them the edge right now to stand at 15-20K. I would assume it is at 15-20,000 dollars per Bitcoin, the whole reserve. So it is not the prediction, it is the structure which matters. The objective is not maximum profit, the objective is long-term survivability on which these funds they survive for long generations. Let's look at the mathematics of capital destruction, drawdown recovery reality. Whenever you face a large drawdown of, let's say, 50%, you have to recover another 100% to be even. Whenever you face a drawdown of 70, you have to recover 233 to be even. So same thing that we learned last time, the drawdown destruction. This is recovery and loss ratio, which when increases with your loss, with your drawdown, and that's how the accounts they get damned and destroyed and they get blown up. This is why risk structure matters more than aggressive gains. And this is the reason why you see three strategies. You see three flows: micro flow, smart flow, and alpha flow. And this is the reason why I say uniformly balance your funds in all the three strategies in ratios. That will keep you growing consistently with all the strategies. Because that is why, because once capital collapses, the mathematics it starts working against you. So why Rift Auto Engine is built differently? Traditional platforms focus on giving users access, providing leverage, maximizing activity. Rift focuses on execution structure, capital behavior, participation management, flow distribution, active capital, and idle capital. Active capital stays in engine's control. Idle capital is something that you can reinvest. So the biggest player in the room is a reinvest button, which when used with consistency can take you to crazy gains. I will repeat that 1% theory again today. The flow distribution, multi position execution. Not all capital should always be exposed. The power of distributed execution. That there's a reason why we have three flows. Retail traders often think one trade, one outcome, but professional systems think differently. They distribute entries, exposure, execution timing, position sizing. Let's take real example. One trader with one Bitcoin entry, full size position, high emotional sensitivity, but Rift structure with multiple assets, multiple cycles, multiple flows, distributed exposure. Also, not just multiple assets, multiple cycles, multiple different exposure. We are trading in multiple different industries. We trade in crypto, we trade in stocks, we trade in commodities, we trade in forex. So if we compare to the Rift auto trading system, it is a distributed architecture of alpha flow, smart flow, and micro flow with diversified assets. It can take a Bitcoin trade, Ethereum trade, Solana trade, Apple, Tesla, Microsoft stock, or gold. At the same time, it can trade in Forex as well. So, multiple smaller positions, diversified assets, smoother growth curve. That leads to lower drawdown risk, diversified resilience, systematic execution, consistent compounding. That's why I'm saying the magic button is reinvest button, which when utilized, used in a wise way, leads you to a massive compounding. So why compounding changes everything? Most people underestimate compounding because they think systems think exponentially. Again, I will give you 1% daily compounding example of 30 days. It gives you 35% growth. 90 days gives you 145% upside. 180 days, if you compound 1% every day, gives you 500% gains. That means even if you're not able to reinvest every single day, if you are able to reinvest uh, 2 days, after 2 days, after every alternative day, that means in 1 year you can grow your capital by 500% with one license. Just mathematics you can figure out. I'm taking example. You have a license of 365 days. If you just use the reinvest button wisely, you can grow your capital into 500% for 180 days. Sorry,
Pervez,
for
can I
365.
just ask a quick question here?
Mm-hmm.
So you said that we should invest every time we have $10, we
Mm-hmm.
should reinvest. So for example, if someone is getting $10 5 times a day and they're
Mm-hmm.
doing reinvesting 5 times a day,
They're
that's
basically running faster.
creating
Uh-huh.
that's creating loads of individual cycles. Does
Cycles.
that have any impact on the
No, no,
system
that
at
does
all?
not have any impact because our system is. Tonight, I'm going to discuss about the architecture. Then you will see how cycles they work, and they don't have any impact on. That's why we have cycles, and it is the edge that you collect with the cycles. And what you can do, you can consolidate your cycles if you have a mathematical challenge after some time, maybe once every month, you can consolidate everything and put it back to. Otherwise, cycles have no issues. You can run 365 cycles in one flow, no problem. Every single day, you can create a new cycle, not a problem. So these are mathematical compounding examples. These are not guaranteed. I'm just giving you the understanding as to how your compounding can benefit you throughout a year with one license. So this is why consistency matters more than occasional large wins. So linear versus compound growth. This chart we have seen, I think, 3 times. The third time I'm showing this chart to you guys. Your capital growth over years grows significantly higher if you compound it year on year or month on month. Here you are compounding day on day. So we took example of day on day as well here. And if we look at year on year, in 10 years, it's approximately 730% extra or above a usual manual trader making gains always, not making a loss without compounding, but a trader with compounding, not making a loss, is taking home 730% upside over the same portfolio for 10 years. So, compounding plays a huge role um, in this. Even if the market is volatile and you are compounding, the market is not very too much in your favor. If you're compounding, then also you face losses. Losses, they don't mean anything to you if you compound over and over. Why most people still fail even with the system? Same thing with that we discussed in the last episode. The over allocation, withdrawing too early, chasing unrealistic expectations, interrupting compounding cycles, panic during volatility. A system do not remove human behavior, it exposes it. Now, the future of capital participation. Financial industry is moving towards system driven participation, automated execution layers, AI assisted infrastructure, structured capital frameworks. The shift is already happening. If we look at JP Morgan and New York Stock Exchange studies, over 70% of the market volume is algorithmically influenced. Quant funds continue to expanding globally. Discretionary retail performance continues underperforming. That means the retail traders are blowing their accounts over and over and they have stopped eventually. The edge is no longer in who analyzes faster, the edge is who executes structurally. So let's simplify everything with that we discussed today. Retail traders focus on trades, predictions, profits. Professional systems focus on structure, distribution, survivability, and scalability. Uh, the biggest and the most important one to understand is survivability. That's why we took example of Pantera of Bitcoin buying. And this is where Rift operates between human intention and system execution. Because the market rewards consistency, structure, survivability, and disciplined participation, not emotional intensity, not random aggression. And the system that understands this are the systems that scale. In the episode 7, we are going to go into the learning of the psychology trap of why most traders self destruct even with good systems. So, we will learn in episode 7 what not to do with Rift, why most traders fear versus greed cycles, why profits create overconfidence, the dopamine loop in trading, revenge trading mechanics, why most traders sabotage compounding, system discipline versus emotional execution, behavioral finance breakdown. Thank you so much for joining episode 6. I will see you in 7. Now I will go on and jump on the architecture first.
Chavez, I just have to comment on episode 7. I'm really looking forward to it because I think that you have just described my trading. I'm going, oh, yeah, that's me too. That's me. So I'm going to look for therapeutic cure in episode 7.
Okay. All right. So today we are going to learn and understand the core architecture of auto trading engine, how it operates fundamentally as an engine. There are two zones in which the auto trading engine works in terms of wallets and settlement engine. One zone is user controlled asset layer, which is a self custodial layer, and then is the engine managed execution layer, which is a engine managed layer, which is basically execution pool, trading engine, and exchange venue, where the whole exposure to market is driven. Uh, the first, I would like to answer the core question which came. It was around the custody of the EOA, externally owned address. Um, it is with the prevention of private keys that we don't want to expose. We don't want to expose the smart contract with multiple endpoints because we are connected to Hyperliquid at one end, we are connected to the smart contract at the other end, we are connected to the user uh, uh, signage at the self custodial end because you can withdraw at your own will. We don't process your withdrawals as a system. The smart contract allows you to sign for your withdrawal. When you click on stop earning, your cycle ends. Your cycle is halted by the engine. So you are the signing authority. So the smart contract is exposed to multiple signing endpoints, and we don't want to increase those endpoints because eventually, what we are getting into, we are, as Chantel kind of digged last in the last Zoom, we are going into high frequency trading from here on Rift. So, with high frequency trading accessible to retail users, we will be in bigger exposure of your private keys, your self custodial private keys, our smart contract keys, and our externally owned addresses private keys. So we don't want more exposure. That is why we are building different architecture on top of the existing one. So existing one first I'm going to explain, and then what we are building next I'm going to explain. Both of the explanations are there in this document, and I'm free to share this document with you guys as well. So user wallet is completely your wallet which you create with after paying $10 to Rift, and that wallet, when you transfer the funds, goes into the relay wallet where the routing is done to the custody boundary to the execution pool where there is execution of funds, and which is connected to the trading engine, and trading engine is connected with the exchange venue which is interacting with hyperliquid APIs, as well as which is the hybrid DEX, hybrid decentralized exchange. We have built the whole hybrid DEX inside auto trading engine to bounce back with your profits in cycles to you. That's why whenever you invest, let's say reinvest $5 also, $10 also, earlier 5 also, it used to become a cycle. So the whole hybrid DEX is built to count and to keep the track of the cycles that are built. Uh, I'm going to explain all of these in detail as well. So here's the summary of how execution is done. So it focuses on capital efficiency. Many people ask, are we scalable enough? What are we going to do with if the TVL grows to $2 billion or $5 billion, what will you do? It will, if it will grow with $200 million, $200 million. This is the architecture. The existing architecture can support even billions of dollars of volume. But on top of this, we are making it so strong, we are making it so efficient that it can also withstand high frequency trading on top of this whole architecture. Uh, mm, okay. Then comes the automated execution, high performance strategy, because these strategies has to work 24/7. This is also one of the factors. If the engine would have worked for defined hours or defined time zone or defined period of time, maybe once in a week, 2 days in a week, or 1 hour a day, then it could have been a different setup. It works consistently, continuously. You all might have been, you all see transactions, right? Every single time in real time in your auto trading engine, and we are extensively working on connecting these transactions also. The buy and sell you are going to see in the loop. That's what we are doing in the background right now, along with bringing the prediction layer on the manual trading side. So this is the upgrade which is coming in the auto trading. But let's understand what is the existing system right now. Then there is scalable approach in the liquidity. Um, Aggregate depth and expand access. With this kind of setup, with EOA, with user EOA, EOA is externally owned address that has a private key that can be controlled by a user. So user have a EOA, we have multiple EOAs, and there is a relay that connects our EOAs to the, so this custody boundary is basically the difference where the product, it becomes into managed custody, managed execution engine, and that's where the funds they grow into execution pool and trading engine, and then it bounces back from exchange venue where there is hybrid decentralized exchange. Okay, so this is the overview of the system. Same overview. User wallet layer, that is self custody EOA. This relay wallet or relay routing layer is the stateless layer of Rift, where the custody boundary is breached by the funds, and from here it becomes managed custody. The execution pool, the trading engine, the exchange venue is a hybrid DEX. This is the architecture logic. User ownership starts at the wallet layer. Routing remains stateless. That's not in your control. That's not in our control. That's whole smart contract based. And the same smart contract has gone for audit. Capital is aggregated for efficient execution. The engine executes across connected venues. So it manages all the cycles, it manages all the flows at once. And I will tell you the reason why there is aggregated pool as well. There is now we understand. So user wallet layer is self-custody EOA, which is compatible with asset ownership, deposit initiation, withdrawal reception, identity, account mapping. Everything is you know embedded in the user wallet layer. Then there is relay routing layer, which is fund routing, transaction batching, allocation tagging, internal accounting signals, that these much funds are allocated to alpha flow, these much funds are allocated to smart flow, these much funds are allocated to micro flow, and the profit should go accordingly to the allocated respected funds and particular user in different cycles. So the end thing is venue connectivity, which bounces back everything to the user. Okay. Then comes the execution pool, that is aggregated capital pool, in which the whole capital aggregation is done, liquidity provisioning is done, trade funding is done, strategy allocation is done. Once the routing layer signals the execution pool sends that particular determined amount. And the reason why I said whenever you allocate the funds, it is allocated or it is compiled as a one single unit or one single allocation. It doesn't mean you have allocated the funds wholly to alpha flow. It might even go to micro flow to bring you back profit. It might go to smart flow to bring you back profits. It might go to micro flow as well. So and then comes the trading engine, in which there is off-chain execution system, there is the signal injection, there is the artificial intelligence layer that we have built. This is where signals are received, order execution is done, position management is done, risk control, P&L tracking, compounding logic is happening inside Rift. Then comes the exchange layer, which distributes, which does the venue connectivity, which has even access to centralized exchanges APIs. So in future we can collaborate, we can plug Binance, we can plug Bybit, we can plug different other centralized systems as well, which is a hybrid order book protocol, which does order matching, liquidity access, that does settlement of the whole engine, bounces back everything. So the custody transit point is user control to engine control. Engine pool is execution pool, that is managed capital, and wallet layer is self custody, which is managed by the user. Then comes the capital flow architecture of deposit and withdrawal. So before every cycle ends, or the moment you hit, let me explain the in a very literal way first, then we go to the structure. So whenever you press on stop earning, um the engine waits for your cycle to end, and that's when consolidation every day happens with your number of cycles. So let's say you have 10 cycles running, all 10 cycles are going to consolidate, and the engine will determine that you have placed withdrawal for, let's say, $1,000 out of your 10,000 which are active. So in the next cycle, only 9,000 will go in the execution pool. 1,000 will go to the user wallet. So we will, let's understand the architecture of the deposit and withdraw. So whenever you fund your user wallet, you basically pass on your fund. Whenever you deploy your fund to auto trading engine, you pass it to relay routing. Then it goes to execution pool, then to the trading engine, and then to the exchange execution that I just explained. Okay. In the withdrawal flow, there is user withdrawal request. Then the position which is placed on that capital is unwinded. If there is no position, then it waits for the position to, if there is if there is no position, then also it waits for the consolidation of the whole cycle. Capital reconciliation. Without capital reconciliation, there is no output in which you can withdraw or you can get the capital release. So every single cycle does a capital reconciliation with which particular user which has signed with their self custodial wallet into the relay routing structure gets the funds back which they have requested. Upon reconciliation, the auto trading engine learns that these funds are requested back by the user, and then they are released by the execution pool. And once they are released, they come back to your wallet, and you can withdraw it externally out in MetaMask, Trust, wherever you want. Um, I believe now this is a clear picture as to how funds they run inside the engine, how they get into it, how they go out. Eunice, we can take questions on this, and then we move forward.
Thank you, Chavez. Yes, this is one of the questions we got in the community. It's regarding the custody of the funds after they pass the relay.
Mm-hmm.
We know we have the custody on our
Mm-hmm.
wallet.
Mm-hmm.
Then we know it's interact with the relay. Then
Mm-hmm.
it goes to this trading pool, I would say, no? Where you apply all the AI, the functions, signals, and everything. And the question is, when the funds are in the pool, they say, well, some of the requests we got is well, I don't want to say lose the custody because it's not the word, but it's more like they are not more in our custody. It's more into the engine custody.
Uh-huh.
And
That
then
is the
the
managed,
uh,
that is exactly what the managed custody mean. And I'm going to let me finish and then it will be more clear to you.
okay, go ahead.
Probably. So, this deposit and withdrawal flow is clear, right?
Yes, we already tested and everything is exactly what you say.
Okay, okay, okay. So entry via routing, then execution via pooled capital, exit via reconciliation. This is the core fundamental of the auto trading engine in which the whole engine works. Then we understand the custody model definition. The funds which are idle in your self custody, active trading is in managed custody. This is what you wanted to understand. So, this is the managed execution, and uh, if we don't have the funds in the managed custody, we cannot trade. You understand? So, this is a hybrid custody model. Take a screenshot of this if you.
Yeah, I
I
took it.
will
I
send
took it.
this. I will send this document, no problem. But this is the whole principle that we have built inside the auto trading engine, that this wallet, execution pool and trading engine, it works in managed custody model, which when is commanded by the self custody of user at the idle state, when with the relay wallet, or when it goes out in the uh, capital reconciliation pool, execution pool. So this managed execution is basically commanded, or it works with these two endpoints. One is the user's custody that gets in, other one is the reconciliation layer which when lets it get out. That's why you have always a 24-hour window in which you can take the withdrawal, or you can ask the pool or execution engine to stop earning on your funds. And that's where the unwinding of position happens and capital is reconciled and it gets released to the execution pool. From execution pool, it is released to the user wallet. So this is the process in which it works. So it's a hybrid custody model which we have built. So Rift operates as a hybrid custody system where user assets transition from self-custody to managed execution during active trading cycles. And the cycles are not disturbed, so we do not want to hamper the cycles. That's why there's a window which you can request. And you can maybe request for partially, you can request for full, you can request, you can reinvest. The same process happens with the reinvestment also, and that is the reason why it creates another cycle to keep it well accounted for the exchange layer, because the exchange layer does the, it's the accountant of the automated trading engine. Then we come to the execution cycle model. The execution cycle starts the time at the time when you deposit funds to the engine. It gets into deployment, then it gets into active trading, then P&L realization. This is every single day. Then here, if it is reallocated, reinvested, or there is reconciliation of withdrawals, it goes to the user wallet from here. Otherwise, the cycle ends and it starts again. This is a loop in which it keeps on functioning every single day. So it starts from self custody, it ends at self custody. Every single cycle starts from self custody, ends to self custody. So withdrawals they occur at cycle boundaries, safe exit points. Why this matters? Prevents forced liquidation, maintains strategy integrity, and avoids slippage spikes. Because if you request for withdrawal and your withdrawal is instant, then there might be a drawdown because of the positions, right? So the engine moves towards the reconciliation point at which it reconciles at the exchange layer, which prevents user to face any kind of drawdown or slippage. So execution continuity, controlled exits, and compounding aware reallocation is happening in the cycle execution model. Then we'll look at the security architecture of the engine. This is the current pool. Uh, Planned enhancements also we have. So current model works with controlled execution wallets, internal reconciliation, and access restricted infrastructure. Planned enhancements are these. Custody hardening we are enhancing. With high frequency trading upcoming, we will introduce multi-signature control, MFN, and role-based access segregation. In transaction safety, we will introduce time clock mechanism in which the withdrawals, we already have a cycle based system, we will enhance it into a time clock mechanism. Delayed execution safeguards. With transparency, we are going to make the relay as well as the execution wallet into public disclosure so that you can check, you can see visibly your positions of the pool, positions of the whole entire allocated pool. Then audit logs. Protocol evolution. In terms of protocol evolution, we are focusing on smart contract vaults, on-chain accounting, verifiable execution stats. The same that we talked about, the buy and sell, transaction hashes, matching. Security is evolving from operational controls towards who is wanting to remote control my computer? Some Russian guy wants to control my computer. So, liquidity and scaling model. Can we stop this guy from sending me requests?
Can I have the name, please? Do you know?
Name. Okay, okay. Something in Russian.
I have the name.
Okay, thank you, sir.
Okay. This is okay again. Starts with O. Liquidity and scaling model. Why aggregation matters and what limits capacity. So, like I said, it is a aggregated pooling in which the three flows they operate with unified execution, optimized sizing, better pricing. And that's why we have consolidated liquidity and you see a single TVL of all three flows into one engine. So, then comes the scaling constraint, in which scaling is ultimately constrained by executable market capacity, not by available capital. These are the questions which I received from you guys, and we prepared this document. Tech team prepared this document. Uh, okay. So without pooling, what happens? There is fragmented liquidity, there is poor fills, higher slippage versus with pooling. It is unified execution. That's why I said it is not defined, never defined that you allocate your funds to alpha flow. It would always trade with alpha flow. It might shift to different flows at the at convenience of profitability, at convenience of it getting into a profitable trade. So aggregated capital improves execution quality, but sustainable scaling depends on depth, liquidity, and capacity discipline. Then we have withdrawal mechanics. The condition, I mean, we can put this, we are thinking of putting this condition: if no open positions are there, you can withdraw in minutes. If there are active conditions, then you can withdraw up to 24 hours, which is the existing scenario. But even if there is no positions active, it is very difficult to determine because you have different cycles of your allocated funds, and the cycles are so different and so unique, it will make us develop a whole new layer that will help and understand to determine which funds are not in use, and that would make our TMA heavy and heavy. And as it is getting heavier, it is not, uh, you know, people with old phones are getting difficulty in using the app. So, kind of, you know, we are in dilemma with adding more functionalities with that standpoint. So, and we have justification for the delay as well, that is safe execution and exit, risk reduction, capital reconciliation. Without reconciliation of capital after every single cycle, there is no release of funds, or there is no reinvestment of funds. So currently, in the current state, it is a hybrid custody EOA pool. In the stage 2, some multi-sig and transparent pools. In the final stage, we will have smart contract vault system, which is on-chain verified execution. So we are currently entering into the stage 2 in terms of development, and hopefully by next couple of months we will finish stage 3 as well very soon. So Rift prioritizes execution efficiency through managed capital model today, with a clear roadmap towards trust, minimalized, verifiable, and decentralized custody systems. Rift delivers high performance automated trading, structured capital deployment, scalable execution infrastructure, while maintaining transparent custody boundaries, explicit risk acknowledgement, progressive decentralization roadmap. Perfect. Any questions, Eunice? I will pass on this document to you guys. You guys can take your time till tomorrow or till 2, 3 days. Study it. Let me know if you face any understanding challenge. Then I'll be happy to assist. Or
Yes, I
you guys
think,
can write down all the questions,
yes,
send it over to me, and
yes.
I can write back like I did
Yeah.
previously.
Amazing. Chavez, I have to say, this is probably the most powerful transparency I have ever seen, really. So I'm hoping everyone who has any questions or anything, it's cleared a lot of people's doubts or questions. And from this document, as you said, any other questions come up, we will collect it and send it to you, and then we get the answers. Sorry, Chantal, go for it.
Hmm.
Look, I completely agree with what Lucky is saying. Chavez, this is a Chavez I met 4 years ago when you were telling us in detail how your systems are working, and this is absolutely why I love working with you and the team and everybody around it. I always like to just look around the corner. I see where your final state is, and I completely agree with you. In the, let's say, in the other world, in the fiat world, because they don't have smart contracts, they're working with part or full either insurances or backing or anything in that level. At a particular moment in your roadmap, you spoke about that. Was that only relevant for Geobank, or is that also something you are considering, given the fact that we have a certain period, a mixed model? Or did I miss something in what you presented?
Yes, I mentioned proof of reserve here. I think I forgot to explain it. That's why I'm going to hand over the document to you guys. I have written it.
It's
Proof of
okay. It's okay. If you say it's in it, I'm sure it's in
It's
it.
there.
I
It's there.
didn't
It's
hear
there,
It's
it.
Chavez.
there. Yes.
It's there. In the go in the top, go up. I think it's in the number. Let me tell you, number 7. Number 7, Chavez. Go down.
Slide
Yeah,
number
in the middle.
7.
Transparency.
Proof of reserves, public wallet disclosure.
Okay. Thank you. I missed it. Okay, thank you.
So Chantal is right at everything that we're doing. Chantal, I mean, you can join my team now. You're
Oh,
really good. we
hey,
can we
this
can
is
keep
how
you.
we're working together, Chavez.
Yeah.
I have clever people who put pressure on me, and then I have Lucky and Eunice around me who kind of mull that, and then we come to you. So it's like we're baking a cake together here.
Amazing.
Thank you, Chantal. Eunice?
Yes, Chavez, I just wanted to say, first of all, thank you for all the answers. Most of those answers that went through Lucky. We sent the information to Lucky, and she managed to send you, and the team is very happy because we have a real connection. The question, there are no empty answers, and really appreciated that. And I hope now with all this information you share with us, they will get more clarity. And if you have a question, we transfer to Lucky in order to you to get those questions. Thank you, Chavez. And by the way, I just tell some of the people that are here, most of the process that Chavez show us in Drift, we actually test all those process, and everything is what he said, exactly what he said is what exactly we have in our end. Thank you, Chavez.
Thank you, Eunice.
Hi, Finale. Thank you. Go ahead and you're muted. Okay, good. Go ahead and proceed.
Hey, Vinao,
Hi,
how are you?
hi, Chavez. I cannot thank you enough for what you do. In the past 3 weeks, I had to go out there to experience of what the Polynesians into, and a lot of scam out there. They lost so much money, and I feel for my community because I see them join. It hurt my feeling because we've been with you 4 years now, and I said to myself, why are they going and promote something? It's not stable. It's not reliable. But they hurt so much. And I'm glad they're coming back, And I cannot thank you enough. My community, the Tongan community, a lot of Polynesians hurt so much out there. They hurt.
Nobody can help
And I
that.
feel for them. And I said to myself, I shared this with them 3 years ago. And some of them, because, hyperverse, it was ruined my reputation. A lot of them think that I use their money. Not that they know. I don't have a clue. But since I met you, I learned a lot. But I'm glad they opened their eyes now. and see there's a lot of scam out there. They take advantage of them because of they don't know. They don't know. But I'm glad you come and educate us to know what we into so people not take advantage of us. And I'm glad they coming back. And I
Every,
know a lot of people, man, it's break my heart to see them out there. And they call me. I said, I don't know what to tell you, but I will introduce you guys something that will help you in the long run. Thank you, Chavez. Thank you, Lucky. And thank you to all the leaders that still here with us. Thank
thank you.
you.
Thank you so
Mm.
much.
Thank you for now.
But for now, that's very heartfelt. I'll tell you the formula for avoiding scams. As long as there's the developer, the founder, the CEO keeps showing up very often, it's weekly, some now 3 times a week. As long as he keeps showing up, you know it's not a scam. Some of the scams that you see is when the leaders are not there, is AI, some kind of a foreign voice or something of this nature. You've had the opportunity to meet these people, meet them by Zoom, and they're not afraid to show their face. So there, tell your folks that, okay? And so they can share and understand the love that you have for the efforts of Shabazz. Okay?
Thank you.
You're awesome. You're awesome. Thank you so much for sharing that. It is just wonderful to hear that they're coming back and realizing they're, as Sheba Joe says, they're forever home. Okay, so are there any more questions? Any other comments? Chavez, I believe you've done it again. As I'm saying, I'm looking forward to episode 7 for therapeutic cure. I'm telling you, I'm looking at that list, that whole agenda, and I said, oh my goodness, he's describing everything I'm doing. So I'm looking forward to it. But one of the things that you have demonstrated here, Chavez, with this detail is this: when people make their suggestions and ask certain questions, the transparency of this detail shows the amount of effort that goes into this, the intricacies of the flow, what has to be considered in order to be able to produce a product that is reliable, that it is consistent. And in any step of that flow, if
Mhm.
something just goes awry because of changes, or what is it, the changes or updates in certain systems not under your control, then you have to take care of that. Take some time and see where in the flow it affected. So thank you so much for that exposure.
Thank
Now, Lucky, do you
Grace,
have
yes.
anything else to share with
I
us?
I do, just to end the call. I think Chavez on Monday shared with all of us, which is a very proud moment for our community, that he's attending the Unchained Summit in Vietnam. It's a very, very prestigious global Web3 and blockchain event. And alongside major names like Tether, Maxi, and from early developer days, Chavez, to now standing on global stages. What a journey, and how proud do we feel, to see you going through. And now, with Rift being an amazing product, I think that comes from your vision, hard work, and dedication. And thank you for not giving up on us. That's all I say to you. And for continuing to build and for always pushing forward, even through tough times. So, wishing you every success, and I hope you make some amazing connections at the summit. So, thank you very much.
Thank you so much, sis. I'm just glad that I'm able to keep up at Chantal's expectations. That's it. That makes me super happy.
On that note, Chavez, I do want to respond to what Finau is saying. You know what you did tonight is you gave a complete positive side of why we are a company to follow, why you and your development team are CEO to follow. But you know, ever since the first time that you mentioned Perplexity as a new AI, I think at the moment I'm like using 5 different ones as a result of you to just look at how can I organize my business better and how can I help people be better leaders. I know you created Chavez AI, and I think one of the first things that Chavez AI need to do is help people how to recognize a scammer and where not to be. Because that takes away half of our negative energy, creates the way forward to celebrate everything why we are doing our job. And we're helping Finau, get her energy back because she can help all those people. And trust me, in Africa, there are plenty others everywhere around the world.
It's
So,
everywhere.
you know, if
Mhm.
I can look behind the bend or around the bend, then I think, helping the tools to defend
Okay.
what we
Okay.
have.
I will give you guys a document of prompts
Yes,
to put in AI and understand which websites do not have anything in the background.
It would be great, Chavez.
Uh,
super.
uh, So when one session will be AI prompts,
Yes,
how to
great.
how to find out the actual tools, how to differentiate between just UI or there is something running in the background or not.
Super.
Fantastic. You had
Thank you.
introduced, um, it's great. I think that we announced that you had introduced and Futures is available now on the platform and the Rift platform Futures.
Futures, yeah, futures is live for everybody.
It is. And is there a difference or how does it interplay
No,
with the
same.
platform?
It's same in terms of fees, it's same in terms of execution. You just customize your stop loss and take profit point.
Oh, okay. That's where you customize that.
Mhm. Because many of you demanded initially when we introduced Rift manual trading. Carl said one day that can we decrease the stop loss? Can we increase the profit? Then Abu Bakr ji said, can we customize the you know entry positions with particular assets? So here you go. We built the whole manual thing for you guys.
It's great, Chavez, because on this you can see the candlesticks
Yeah,
like on what's it called? Live.
live. Yeah.
Yes, and it's great. Because before we had to go look at candlesticks on a
Mhm,
different place, then
mhm.
have two screens. Now we go everything on one screen. So
Exactly.
it's fantastic.
It is.
All
So,
right. Okay, sorry, Grace. I was gonna
oh
say
no.
let's close if for nothing else. Go.
No, we are ready to go ahead and wrap it up. So if there's no other questions, or comments, Eunice is going no. Okay, that means there's nobody asking any questions. Okay, if Eunice is not asking a question and saying no, we're done. Listen, folks, it's so great to see you. Oh, you said okay. It's so great to see you here. You understand now. You're seeing the Monday, Wednesday, Friday with Chavez. It is enriching. Just not as far as just the education, the training, the information, all of that, but it really helps you to understand the tiger that you've got by the tail. So remember, rift before you quit. And we'll see you tomorrow for a presentation and again on Friday with Chavez. Okay? All righty. Thank you so much. Appreciate you, leaders. Appreciate all your contributions. Thank you. Bye bye.